Hi, Danny Fleming.
And Marcus Collins from MA Properties with the 2021 market update for Lexington.
Yes, we do a few of these for different towns. So check on our blog page on our website for a town that you're interested in. If it's not there, let us know and we'll do one of these for your town, because we have something like 50 plus towns worth of data. So we've got all the information there. We'll just pull it together and do one for you. Okay, so we should get going. Why do we do this? Well, it's easy to get information and data today, but much harder to make sense of it and to use it to your advantage. This is why we take the time to explain why we're serious about learning every data point and detail, and why we study our local market so obsessively. It really is quite obsessive, but that's okay.
As you'll see in a moment.
So the agenda. We'll go through with single family homes. We'll then go into the luxury market, condos, and 2020 current stats and predictions.
So where can I get this information?
Where can you get it from? While I answer my phone. Okay. Okay. You can get this information out of our 2020 market review. The 2020 market review has 2020 information, and that's on our website. But also on our website, you can find the current information right now. Here we are, up to date every month. This is all updated. If you scroll down on our main page, scroll down, there's a real estate statistics tab. If you click on that, you'll get these graphs that you can see here, plus about 20 others, 15 others.
Yeah, maybe not quite that many, but yes.
There's a whole lot. There's just 6 here on this screen, and they just keep scrolling down and down and down, all different sorts of different types of information on any type of home, whether it be a single family, condo, multifamily, or 50 odd towns. So go for it. Anyway, let's get on to single family homes.
Okay.
Well, Marcus takes a drink,
right? Okay, so single family homes. We're going to look at a whole bunch of graphs here, showing some of it, like this one goes way back till 2006. Most of the others are about the last decade or so. So, but we're looking at trends in many cases here. And what you can see in this graph, I have a new toy, as Danny will have explained before. Look at that, there we go. What you're seeing with these high inventory levels in this period here was the downturn, the so-called crash, if you will. What happened then is, in about 2012, 2013, depending on the town, the buyers came back into the market in force. I mean, it was really very much a buyer-driven market. And those low inventory levels have continued all the way through to today. And as you can see, as we kind of come bang up to date, in 2021 there, very, very low inventory levels. So,
did you point out that their inventory levels at the beginning, each of those data points is at the beginning of every month?
Right, you just did.
Okay, I just did.
All right.
Okay, each of those data points is how many homes are available for sale at the beginning of the month. So it's not how many are selling, it's how many homes are available to buy on the first of the month.
Right. So that's kind of the long-term trend. Very much been a buyer's market through from 2012 to all the way through to today and continuing in today as well.
Seller's market.
A seller's market, sorry. Buyers driving the market.
You're going to hate me interrupting you,
I'm going to let Danny do it now. You can do it for now.
A buyer's market. It's not a buyer's market. It's a seller's market.
It's like left and right. I always get that wrong. So,
yes, he does.
What this graph shows is the number of home sales in the last, actually just a decade plus year to date this year. So blue is existing homes, green are new construction, and then that kind of orangey color is the off-market teardowns, those homes that don't actually come on the market. They get converted straight away into new construction. So, as you can see, we saw a steady decline from 2015 all the way through to 2019, caused primarily by sellers being unable to buy their next home, because the seller today is clearly also a buyer. difficulty in buying their new home, but also a large number of people deciding to stay where they are, age in place, if you will. Yes, they want to downsize, but why don't I take advantage of all the price appreciation I'm currently getting and stay in my existing home. 2020 kicked in. As you can see, the numbers rose dramatically in terms of the number of homes that actually sold. People, sellers deciding now is a good time to sell. Lots of buyers in the market too. And so we, as you can see there, a large number of home sales. Now, as we come forward to 2021, we talk a little bit about the projection. So I have year to date, 6 months year to date. As you can see, we're at 141 homes and 31 new construction. That's what sold in the first 6 months of this year. And now I need to try and give some kind of projection where I think the home sales are going to go throughout the rest of this year. Looks like, based on some analysis of 2018 and 2019, I kind of want to avoid 2020 as it was such a strange year, we are going to see a dramatic increase in the number of homes that we saw in those 18-19, but looks like as well more than we saw in 2020. But a little bit of a caveat here, because the way I do this projection is somewhat simplistic. It just looks at some ratios. And I suspect that we have seen a larger number of homes come on the market in the first half of the year, and that won't necessarily continue. That rate of change won't necessarily continue throughout the rest of the year. Yes, it will be high, and I'll show you some cumulative numbers in a minute, but I don't think that large increase will continue throughout the rest of 2021. So I think this number is a little bit high. It's certainly as high as 2020, but how much higher than 2020, I think we'll know more as we kind of get a little bit more information. But it's certainly seen a large number of homes sell in 2021 versus prior years.
Can I get you to have a look at the teardown off-market sales? And I want you to keep that number of how many homes are sold direct to builders. Typically over the last decade, we're probably, well, the last couple of years, we're talking 35, 30, 22, 40, 48. Just keep in mind those numbers when we come to a couple of graphs further on, because those are sellers who are selling to just one person, a builder. Hold that thought until later. Okay,
there's a story probably. Usually there's a story. So, a few more stats. Year to date, average days on the market, lower than we've seen previously, 31 days versus 41 days. But perhaps more dramatic that shows the strength of the market today is the average sale price to list price ratio.
And that's where I wanted to go with the direct to market, direct to builder, right, off-market sales. On average this year, or you should continue. Just tell people that
go for it.
There could be 40 homes that didn't even come on the market and are not taking advantage of this hugely strong market because they're selling direct to a builder and it's just the builder talking to them.
So that number is much higher than we've ever seen, clearly. Give you a sneak peek, if you look at Arlington, which has always been a stronger market, the average year to date is 109%. So on average, a home is selling for about 10% over asking, which is in Lexington, it's 104%. So clearly a very, very strong market. And you can see that. We knew 2020 was a strong market, but let's compare month by month 2020 versus the second half of 2020 versus the first half of 2021.
And we should point out too that even though the average is 104%, a large number of homes come on the market and they sell for below the asking price. So that average is considering the homes that are selling below the asking price, don't even get the asking price, and the homes that are selling above the asking price. Last year, 49% of the homes that came on the market sold for below the asking price.
Indeed. So let me explain a little bit what we're looking at in this graph. Two things we're looking at. The blue bars are the number of homes that are sold month by month. Remember that a home goes under agreement about 6 to 8 weeks prior to this. So both the numbers we'll see here are something of a lagging indicator, but bear that in mind. So blue is the number of homes that are sold. The orange bar is the sell price to list price ratio month by month. So if you look at the second half year of 2020, very, very strong market. We were averaging month on month 100, 102%. That's kind of where we were for the whole of 2020 that you see here. Look what happens when we get to 2021. As soon as in that March timeframe, bearing in mind a home that sells in March went under agreement, probably in mid-Feb perhaps, early to mid-Feb, already we're well over 100%, and that ratio has continued all the way through here to June. So we thought 2020 was a very strong market. Nothing in comparison to what you see in 2021. It's much, much stronger than that. And you can see that, what everybody cares about, of course, is average prices. And here's the average price for a single family home in Lexington. Blue is historic, green is month by month. And that faint red line is the average for the year. The average for this year, last year I should say, was about 425, 1.425, something like that, just over 1.4. This year it looks like it's tracking to about 1.7. That's a big increase, about a 20% increase in prices this year in comparison to last year. Now, that might dip down depending on what happens in the second half of the year, but I think it's fair to say it will not dip down that much. So we've seen a very, very strong price appreciation this year, both in the average, and the same is true of the median too. Both of those higher, median just below 1.6 in this market. So everything points to a very, very strong seller's market right now. And the indications are that this will continue moving forward. One thing we want to take a look at is compare where we are year on year this year, not necessarily with last year, but with 2019. And let me explain why I don't necessarily want to compare with last year. One reason why, for example, when I looked at the projection, I didn't look at 2020 because, as you can see here, this is the cumulative sales, 2020 versus 2019. And the key thing, two things to note. First one is this here. This is COVID. This is where the number of home sales dipped as we went into the pandemic. In the early May timeframe, so that number started to rise. But this kind of dip, what you see here, that's the pandemic. And then what happened after that, of course, is we saw a lot more home sales in 2020 versus 2019. So this is why, given the tumult that we saw in early 2020, this is why I don't want to, when I'm looking at to do those projections, look at 2020. This is why I compared it to 2018 and 2019, assuming those were somewhat stable years. You can see that, again, that dip here is COVID. So now let's take a look at 2021 versus 2019. And as you can see, we are tracking much higher in 2021 versus 2019. Upwards of about 50 homes, 40 homes, give or take. That's what we're seeing, more sales than we saw in 2019. And this is what I'm basing the projections on. You kind of look at that difference. It looks to be continuing to increase, which is why I'm want to get a little bit more information to kind of hone that projection. What I'm looking for here is this going to stabilize? By the way, this dip here is probably just the July the 4th weekend, so don't pay any attention to that. But as you can see, the rate of increase is continuing. It's positive. It's accelerating moving forward. So is that going to continue, or are we going to stabilize? Some towns, Arlington, for example, we've already stabilized. We know how many more home sales there are going to be in 2021 versus 2019 because the rate of increase has stopped, basically. In Lexington, it's continuing to rise. So we're looking to see if that flattens off or whether it continues this upward trend. So that's kind of a sense of where we are with the single family market. Should we take a look at luxury? Because it's kind of an interesting story too.
Yeah, it's very interesting.
So home sales, this time, I should define luxury as, we define luxury as over $2 million. So any home that sells over $2 million, we define as a luxury sale. So that's kind of the arbitrary number, but that's kind of what we've been using for a number of years now. And we kind of been tracking this. Home sales, again, like you saw previously, red is the projection. there's a large number of over $2 million homes selling this year versus 2020, let alone versus 2019. Again, that might slow down a little bit, but it's interesting to look at the green here. So last year, 2019, we had 22 sales in the total year. 2020
new construction.
New construction, yep. 2019
2020
was 29. 2019 was 2020. 2020 was 2019, and here we are year to date. So this is half year basically. In the first 6 months, we've already seen 21 new construction homes sell in the first 6 months. Last year, 29 sold in the whole year. So there clearly is a large increase in the number of new construction homes over 2 million, but also you kind of pan that out to the market in general, a large number of sales over $2 million in the market in general. And we're seeing a shift in the distribution. So there's something more going on here than general price appreciation. Clearly, price appreciation is, with a 10 to 20% increase in average sale price, that's pushing properties over $2 million. So that's one effect. But there's a little bit more going on here, because if you look at the distribution, 2 to 2.5, 2.5 to 3, and over 3, normally what we see, and you can see it in 18, 19, and 20, there's a large number of $2 to $2.5 million homes. That's homes that ordinarily would have sold at 1.9. Price appreciation kind of dips them over to 2 million. So a large price appreciation is largely what's driving that high 2 to 2.5 million. But look at 2021 year to date. We don't see that high increase. This large number of new construction or luxury homes coming on, new construction as well as others, is not just caused by general price appreciation. We're seeing a lot more homes coming on the market over $2 million that wouldn't have previously. Some of that new construction, some of that not. So we're definitely seeing a change in the distribution of sale prices. So it's kind of interesting to see that. It doesn't look like, as you can see, like every other year. It's very different.
We've already sold more $3 million homes this year in the first 6 months than we sold for the whole of 2020. And the same thing for 2.5 million to 3 million. We've almost sold as many in the first 6 months as we did in the whole year of 2020. It's quite staggering. Yeah,
remember, this is just first 6 months. So that's, those numbers are much, much higher, certainly over $2.5 million, that's for sure. There's something fundamental going on there in terms of the town being able to carry properties over 2.5 million, which historically they would struggle to do, and certainly over 3 million. Properties in Lexington over 3 million were very rare, and they struggled to sell. Well, that's clearly changed.
Back in 2018, only 2 homes sold over $3 million.
Yep, exactly. Finally, we look at condominiums. Same idea here in terms of the number of home sales. This projection, it varies a lot, condominiums, primarily because when a new condominium development comes on, it kind of dumps 10, 15, 20 new construction condominiums on the market, and a kind of dump of them. And you can see those showing in terms of the blue bar here. The number of existing condominiums that sell is pretty stable. 46, 45, 42, it's pretty stable over the last few years. Looks like, this projection I've got here, it's assuming we are going to get a condo development coming online. We have one on Emerson Gardens that may come online this year, and so that may mean that projection is more accurate. But I think we need a more linear run for the projection. We also need that new construction development to come on to get that additional 44 homes.
To get the projections.
To get that kind of 70 new construction, which we may see.
Because last year there were 22.
And we may get that number this year. Yeah, we may get that number this year. The average price, though, because we haven't necessarily seen that many new construction condos this year, is actually lower than we've seen previously. Which is interesting. The condo market nowhere near as strong. If you listen to these discussions we've had before, there's a lot of explanation of why that is. But as you can see here, the average condo price a little bit lower than we've seen historically. Predominantly, I think, because we're not seeing that new construction yet this year. If we look at just the existing condominiums, we do see a slight uptick. As you can see, 18, 19, 20, the average condo price, the existing condominiums now, declined. It's only this year's the first year we've seen about a 10% rise over 2020, but that's much lower than we've seen historically. So we're really not seeing much of an increase in existing condominium prices.
Well, much lower than we're seeing for single families.
Yes, no question about that.
Not historically, but for single families.
Yep. Single family always outpaces condominiums, and certainly since 2018, we've seen positive price appreciation for single family and negative price depreciation for existing condos. So we're kind of resetting that a little bit, but condos still tracking way behind single families, no question about that, even in a good year. So that's kind of the stats of it, if you like, and worth kind of thinking about why are we necessarily seeing what we're seeing. Which is a very, very strong seller's market. Lots of buyers in the market willing to pay way over the asking price for the right home. We have to add that caveat. We do still see homes that are not selling in Lexington. Even though the average is 109, there are homes which are not selling. Overpriced, not prepared well, not staged. Those are the homes which fail to sell. The ones that have the right preparation, staging, marketing, and so on. Those are the ones that are priced correctly. Those are the ones that see that very high price appreciation and high sale price list price ratio.
And it really is what it is when you look at in total, we could say that there's low inventory. There is, but it's not because there's low supply. That's key to explain. It's not because there's low supply. You saw with the cumulative sales, we've actually sold 50 more single family homes at this point in time this year than in 2019. It's more because the buyer demand has just skyrocketed. And I always like to characterize it that there's a fundamental shift in what buyers are looking for with a home or where to live. Even just in December, our younger son and his fiance moved back from LA to be close to family. Earlier this year, I was working with 3 different sellers who were all moving to San Diego. People are choosing where they want to live now because of the fact that their work profile, typically, remote work, hybrid models. The commute distance to Boston isn't as important as it was when someone was having to go into work 5 days a week. So we're seeing a fundamental shift in what's important.
And I think this kind of summarizes it. To me, there are clearly lots of reasons, but
Realtor.com. Realtor.com survey. Okay, let's see what they think. Okay.
So
okay, our home no longer meets our needs. Yeah.
We've definitely seen that. People working from home more, and therefore they need another home office. They need our home office, and so on. Clearly, there's been some profit taking in this market. No question about that. As sellers understood prices are increasing and increasing very rapidly, they brought their home on the market, understanding that this was a bumper year and it may not continue, into 2022 and beyond. Smaller home, I think we're seeing as well larger homes. We're seeing both these.
Very definitely.
Yeah, and I think some of that is what's driving the luxury market too. Buyers wanting more space. I'm going to spend longer at home. I'm going to need a home office. Maybe I need 2 home offices. That means I need a much larger home. Therefore, I have to pay over $2 million, for that. You mentioned, moving closer to family and friends. And looking for different features. I mean, a home office is the obvious one. We're hearing more and more people want a pool.
I was going to say, swimming pools. They're really in vogue at the moment.
They never were. It was, when you sold a home with a swimming pool, it was 50-50. Whether it was half the people wanted it, half the people didn't want it. Now, and certainly when you're looking at homes that have got larger homes that have got larger lots, almost inevitably there is the question, can I put a pool in there? Which is definitely a shift to what we've seen previously. So there's a lot of, clearly a lot of different reasons, but there's definitely a shift in what buyers are looking for. And that's what's driving this market.
And not just buyers, but buyers and sellers, because someone who's selling their home is a buyer too. So it's a mass migration of what is important for buyers and sellers with doing that. And this is why when we hear people talking about, it's a bubble, it's going to stop soon and everything, I struggle thinking that that's the case, because it's not. It's people changing their whole value system of what's important to them in a home, and that's not going to change tomorrow, or it's going to be a gradual movement.
Yeah, because buying a home it's not like buying a car. You can sell quite quickly, or buying a stock you can sell quite quickly. Once you buy a home, you're in there for on average 7 to 8 years, probably longer than that in Lexington, because in general when people move into the town, they're predominantly looking for the school system, and that means they're there until the children leave school or even leave college. So it's probably longer, the average tenure in a home in Lexington, than the 8 years. But it is an 8-year decision. It's not something you can change your mind.
Yeah.
I think it's fair to say that the price appreciation we've seen this year may not continue moving forward. That's probably going to abate. But what is not going to happen, there's no reason why that we're going to see a price reduction. That just seems unlikely. We've seen a kind of blip in terms of house price appreciation, and that's reset the bar to some extent. And now we'll get back to business as usual. Our suspicion is in 2022, we'll get back to business as usual, back to that 3-5% price appreciation. So it looks like we've had a bump to get us up to a new norm, and then that we'll get back to say business as usual. And it's not necessarily.
So just as a plug, if you're
Okay.
thinking about selling, sell now. Sell now, because this is the time to be selling.
I think that's true.
Yeah.
There are some bigger picture things. This is kind of this is to a large extent driven by COVID. Let's face it. But there are some bigger, more generic things going on in the market too. There's some demographic shifts which were driving the market before COVID, and now once we get through this kind of shift in terms of what people are looking for, will continue to drive the market. If you look at this graph, which is from the Census Bureau, you can see 2 bumps in this. This is the number of people who are in each age bracket. There are 2 bumps in there. Let me highlight them here. The upper one is the children born after World War II, the baby boomers, if you like. They're now thinking about retirement, therefore they're thinking about downsizing. That's one driver of the market, a sell as well as a buy. The lower band is the millennials, first-time home buyers. They are also driving the market. They are coming out of rentals, looking to move into their first home. And so those are the 2 big drivers that we'll go back to once we get through this kind of COVID-driven shift in what people are looking for. We'll go back to this just quite quickly, certainly in 22, 23. This will be what drives the market. This has been what's driving the market, certainly since we came out of the recession back in 08, 09, in terms of the market, 2012. This is the effect that's been driving the market, and we'll get back to that sooner rather than later. The other thing is mortgage interest rates, and this is kind of interesting because we hear today that interest rates are low, but it's interesting that interest rates are low even in comparison to 2019, 2018. And even then we were thinking rates were going to rise, but they weren't high enough to impact the market. Only when they get to 5.5 or 6% would they start to have a negative impact on the market. This is the data. I pulled this data today, and as you can see, even by the time we get to mid-22, the best projection we have today is that we're 3.5%, where we were at 4.5% in 2018. So mortgage interest rates allowing buyers to buy homes because those interest rates are so low. So that's a positive, and it's got a long way to go before people can no longer, the interest rates mean they can't afford homes, although price appreciation clearly will have an impact, because at some point a home becomes essentially just too expensive for people to buy. So, but that's not yet. So, big picture. We think about 2021, the remainder of it,
and 2022. So
Who's going to go first? We might not agree on this. I have no idea, by the way. But
well, my thoughts
go for it.
Are that the market is going to remain strong for the remainder of 2021. You know, as vaccinations as we're starting to get life back into normal, people are starting to go on vacations, you know, school starts back. I think we're still going to see that fundamental move of people in 2021. 2022, I think we'll start the seasonality that we normally have is going to start to play an impact, and the normal seasonality, there is definite periods of time in a year where it's the best time to sell versus the worst time to sell. And if you're interested in that, you can go to our Selling Essentials video series where we talk about seasonality a little. Right. But I think next year we're going to go back into our normal seasonality. So if you're not thinking about selling this year, think about when you're going to sell in 2022, because that is going to play a difference, play an impact in where you're going to be and how successful you are going to be with, you know, your sale. So what's your idea?
My
Let's
idea?
see. It better be the same as mine.
Yeah, it better be. No, I think in general, let's look at 2021 first of all, as best we can. Clearly a very, very buoyant market. I mean, sellers have come into the market to profit take because the home no longer works for them, and we've seen that anywhere from 20% price appreciation this far in 2021. Can that continue through the rest of 2021? At some level, the buyers will have bought, and you know, there just aren't as many buyers in the market for the rest of the year. Now, having said that, there are still a large number of buyers. There aren't as many. How about that?
They know I've been waiting.
So ordinarily we would see a much slower second half to the year because the buyers, the majority of them will already have bought. This year, yes, they bought, but there are a lot that haven't. And we put homes on the market. I'm thinking of the new construction we brought on the market 2-3 weeks ago. Lots and lots of people coming into that home. Ordinarily, most of those would have already bought, but they haven't. So even with this large number of sellers and large number of sales, there are still buyers in the market. So 2021 for the remainder will be a strong market. Perhaps not as strong as the first half, but it will be a strong market through the rest of 2021.
Can I jump in before you talk about 2022?
Did I jump in? No. Okay.
Well, when you said that a lot of buyers have bought and things, there's a lot of buyers who have pulled back and not bought because of the craziness going on in the market. I think those buyers will start to come back in the remainder of 2021. So yes, there still will be buyers around because now, it's not 35 offers on a home selling for 30% over asking. Okay, maybe it's 10% over asking, and there's
104% is the average. So
you know, just today we had 5 offers on a home, and it's selling for a lot over asking in a town out in Groton where you don't typically get as many you know, competing offers. So the buyers are still out there, and I think more will come in once they start realizing that things are not in the stupid part. Silly, we'll call it silly. The silly period.
Very strong first half of the market.
Yeah, so now you can talk about 2022. Okay. I just wanted to throw that in there.
Okay.
Yeah.
So, first half of 2021 clearly very strong. Second half of 2021 not as strong, but still very much a seller's market. That's for sure. 2022, I agree with you. We're going to go back. I really do. So why not? You know, it's 2022 is a long way away. I can backtrack before then.
It's on.
We will go
tape.
back to, just as I said previously, the fundamentals of the demographic shift and so on. That will come back into play. It's still there, of course, but it's now been swamped by COVID effects. So once we get to 2022, 23. That demographic and the normal way of doing things, we'll get back to that. Prices, I see no reason why prices will decline. We've seen a big uptick in prices this year. that will kind of reset the bar, if you like, and then we'll get back to that 3 to 5% price appreciation as we move through to 2022. And you're right, as we get into the 2022, the seasonality that we ordinarily have, that is the early part of 2022, is a great time to be a seller because there are going to be buyers around.
You've got to make a smart decision. That goes back into making smart decisions and timing when to come on to get maximum impact. That's huge.
Yep.
And
there you go. Yes. There's our thoughts. Strong first half. Not as strong second half, although still positive price appreciation. Lots of buyers out there. What it means though is it's not as strong. Preparation's key. Staging is key. Marketing is key. Pricing it right is key. We get back to the fundamentals, which perhaps you could have got away with in February or March this year. But we've seen today, look at the homes on the market in Lexington. There are homes on the market in Lexington
just sitting there
that are not selling because they broke one of those fundamentals. Norms, and so as we come into the second half, those getting it right, smart decisions, if you will, is going to come right back into play, and that will continue in 2022. So when you hear people say you don't have to do anything, you can just put your home on the market, that's not true. It's never been true. Perhaps sometime in February there was some rationale to that, but today that definitely is not the case. You just have to look at the homes that are sat on the market. We are slowly but surely getting back to that new normal, or the old normal of 2019, which is why I did the projections based on 19. That's kind of what we're getting back to. And so focusing on those fundamentals, that's what will put you into that 110% over asking, whatever it may be. The buyers still are looking for that. There is definitely a shift for the second half of the year.
So did we mention, if you're thinking about selling in the next 12 months, let's bring you on the market this year when we know that this is a great time to be selling. It's a great time to be selling. And we think that our client deserves to be the smartest person at the closing table. And that we all benefit by becoming smarter about home buying and selling. This is why we do this. This is why we do these things, because we're trying to sort of get that knowledge out there so that you can take advantage of the market that's happening right now.
And if you have any questions, we love, as you can see, how long have we been talking now? I don't know how long.
Do we like talking?
Yes, quite a while. So feel free to reach out to us, and we'll kind of fill you in on what's going on with the market, in a little bit more detail, in your price point, whatever it may be, so we can certainly add some flavor to that.
Okay.
With that, we'll say thank you very much.
Thank you.
Bye.
Bye.